A repo is a contract where one player loans loans bonds, government bonds typically, to another person or another entity that gives them the cash. There is a fixed maturity. It could be 4 days, it could be 16 days, so there's a variety of days where they swap that back with a little bit of interest, whoever borrowed the bonds to begin with. And so that's a reverse repo. But the thing about repos is that it's the financial plumbing of the world, right? So you have hedge funds, you have banks, you have other entities that are involved in this. You go and you make a deposit into your money market, and then the cash that you deposit is what's used to buy the bonds and then send them back and make a little bit of money. And when you see, I was just looking at the Wednesday level, you can go into the Fred, F-R-E-D, and you'll see, and put in reverse repos, and so you can pull it up and see. And I was just in there yesterday, and they're up to 1.8 trillion a day overnight, reverse repos. So this does have to do with the liquidity, and it is an indication that the plumbing underlying the global financial system is in crisis, because reverse repos have been around for a little while. Mostly they started using it as a tool in 2013, but lately that's when you're going into the trillions of dollars in overnight borrowing and lending. So it's the plumbing of the global financial system, and it is in crisis right now. What are the hedge funds are about? The hedge funds are about making money. They don't really give a crap about anything else. They're just looking at picking up a few pennies here or a few pennies there, and that may not seem like much until you're dealing in the trillions of dollars, and those few pennies here and there make a big deal. Mm-hmm. But do you remember the TYVIX? TYVIX, which is the 10-year Treasury Volatility Index. And they no longer publish that anymore, which I think is really interesting. But you could kind of, if you look at it and you kind of extrapolate it out, you can basically see when we handed over the 10-year Treasury market, which is the foundation of the global financial system, to traders. And this all kind of ties, I think it all kind of ties in. An overnight reset looks like, Venezuela is just, it comes to mind. And so you have the stock market going up and up and up and up and up and, exponentially up. You have all of these fiat money prices going up and up and up. And so you're going in now, and we're in hyperinflation, and you're buying a pack of gum for $1,000 or $10,000 or something like that, which I know sounds outrageous, but that's because you put value in numbers if it sounds outrageous. And so confidence is lost in the system because all prices are inflating, every hour, every other day, whatever the hyperinflation level is going to be. And then they reset it so overnight, and you see all of the fiat money markets collapse. Now, I'm not saying they go exactly to zero, but they go real close to zero. It depends on what that reset level is, but it seems like most of the time it's 1,000 to 1. So for you as the individual, if you had $1,000 in the bank when you went to sleep that night, you wake up in the morning, you have one of the new dollars in there. So stock markets, bond markets, everything just collapses because the currency has been, reset from 1,000 down to 1, or whatever that reset number is going to be. So the overnight reset is a sudden event. It does happen overnight. It typically happens after the market close. And so there's really nothing that you can do about it. And that's, there are two reasons why we're seeing a melt up in these markets. One is certainly all of the new money that's been printed. But the reason is to keep you engaged in those fake markets. So we were talking earlier today, and someone was saying, well, if I didn't know better, and I'll say this, if I didn't know better, if I was not doing what I do here and reading all of these reports, driving around Phoenix, how much construction do you see? It's all over the place, these huge cranes, these huge projects, and everything kind of seems normal. Well, it's not normal. Yeah, the real estate prices it's not normal. So, a lot of times people will run to the perceived, and it is only a perception, perceived safety of the stock market or bonds, or because we've been taught that this is the only place to put your money. And that's just to keep it elevated, to keep you in that system so they can transfer your wealth, because there's not a darn thing you can do when it's an overnight reset. That's why I'm not in the market. I don't give a crap, because I get this question a lot is, well, don't you feel bad that you've missed these gains? No, I don't feel bad that I've missed the gains, because I know that I will not know 1 second before the whole thing is going to collapse. And it could collapse anytime. Do I think we are hitting the peak of hyperinflation now? No, I don't. But we're definitely in melt up. And, there are a lot of things that are shifting on a global basis in a lot of the key markets. So I just assumed buy what I know is really a bargain because of its utility and because of the price suppression, which is physical gold primarily, and then secondarily physical silver. And it always depends on the function, but I have enough barterable. Well, I think I have enough barterable. So therefore, I'm more about wealth preservation, growth, and legacy. That's what's more important to me at this juncture. If your house goes up nominally, right, in value, then you think that you have more equity, that it's same thing with the stock market. Look at this, it's gone up. Okay, I have more money. The piece that everybody seems to miss is that it doesn't matter how much money you have. It matters what you can do with it. It matters what you can buy with it. It's that purchasing power. And that is going down at a faster rate officially than I've ever seen.